Welcome to BRICS and the shifting global currency landscape, the fall of the USD. In an era of global interconnectedness, the dynamics of international finance and currency markets are undergoing profound changes. The BRICS nations, Brazil, Russia, India, China, and South Africa, have emerged as significant players on the world stage, challenging the long-standing dominance of the US dollar in international trade and finance. Join us as we delve into the fascinating history of money and the intricate web of economic relationships, geopolitical factors, and the rise of alternative reserve currencies that are reshaping the global currency landscape and prompting discussions about the future role of the US dollar in the international monetary system. My bread for your fish. Firstly, we have to look closer to the makings of today's money and the difference to the historical money. The history of money is a fascinating journey that spans thousands of years and reflects the evolution of human civilization. It begins in ancient times when barter systems were prevalent, a method of trade where people exchanged goods and services directly. However, the limitations of barter, such as the double coincidence of wants, led to the emergence of commodity money. In various cultures, items like shells, livestock, grain, and metals like gold and silver began to serve as widely accepted mediums of exchange due to their intrinsic value and durability. As societies advanced, governments and authorities began issuing standardized coinage, facilitating trade and providing a more stable form of money. The concept of paper money emerged in China during the Tang dynasty around 600 BCE, and it gradually spread to other regions. The establishment of central banks in the modern era further refined the monetary system, introducing fiat money, where currency's value relies on trust and government decree rather than intrinsic value. Basically, money grew out of necessity, that one could exchange his goats in one village and later get stones from the stonemason somewhere else. Before this concept emerged, the bottom line was that trade was done there and then vis-a-vis and exchanging one thing to another directly. The gold standard, paper with weight. The gold standard, once a cornerstone of the international monetary system, was a monetary arrangement where the value of a country's currency was directly tied to a specific quantity of gold. This system gained prominence during the 19th and early 20th centuries, offering stability and predictability to global finance. Under the gold standard, participating nations agreed to exchange their currencies for gold at a fixed rate, ensuring that the money supply was limited by the available gold reserves. This stability promoted international trade and investment, as currencies were viewed as reliable and consistent stores of value. However, the rigid constraints of the gold standard also had drawbacks, including limited flexibility for central banks to respond to economic crises and a vulnerability to gold supply shocks. Reserve currency and how it became to be. The concept of a reserve currency, a currency held in significant quantities by governments and institutions as part of their foreign exchange reserves, has evolved over centuries. The earliest reserve currencies can be traced back to powerful empires like the Roman denarius or the Byzantine solidus, which were widely accepted in international trade due to their stability and widespread use. However, the modern concept of a reserve currency emerged in the 20th century. After World War II, the United States became the world's dominant economic and military power, and the US dollar was established as the primary reserve currency under the Bretton Woods system. This system fixed exchange rates to the US dollar, which, in turn, was pegged to gold. The dollar's convertibility to gold gave it trust and stability, making it the currency of choice for foreign exchange reserves. However, the Bretton Woods system collapsed in the early 1970s, leading to a shift to a system of fiat currencies, where the US dollar remained the dominant reserve currency due to the size and strength of the US economy. The status of the US dollar as the world's primary reserve currency continues to shape global finance and trade to this day. But share of significancy of the USD as the superior reserve currency is losing its stabilizing legs. Fiat and not the car. Fiat money is a type of currency that derives its value solely from the trust and confidence of the people who use it, rather than being backed by a physical commodity like gold or silver. The term fiat comes from the Latin word for "let it be done," emphasizing that its value is established by government decree. This system of money has evolved over centuries, but a pivotal moment in its development occurred in the 20th century. Prior to this, many countries operated under the gold standard, where each unit of currency was backed by a specific amount of gold held by the government. The transition to fiat money allowed for greater flexibility in monetary policy and the ability to adapt to changing economic conditions. Today, most of the world's currencies are fiat currencies, and their stability relies on the responsible management of monetary policy by central banks and the trust of the public in their governments. History has shown here and there what happens when plain greed and appetite for fast money takes over in the heads of the responsible managers, and the public is the one picking up the tab for the misjudgments. This system relies on the human factor, and as we all know, this is the fragilest link in the chain. BRICS, the idea and the global financial changes. The term BRIC was originally developed in the context of foreign investment strategies. It was introduced in the 2001 publication, Building Better Global Economic BRICs, by then-chairman of Goldman Sachs Asset Management, Jim O'Neill. BRICS is a grouping of emerging market countries that seek to establish deeper ties between their nations and cooperate on economic expansion, including trade. The countries act as a balance against traditional Western influence, seeking to depend on each other for growing influence in the world. 6 candidate countries like Argentina, Egypt, Ethiopia, Iran, Saudi Arabia, and the United Arab Emirates will be admitted as BRICS members on January 1, 2024. Currently, BRICS members include Brazil, Russia, India, China, and South Africa. The BRICS nations, applicant countries included, encompass about 27% of the world's land surface and approximately 43% of the global population, and with combined nominal GDP of $28 trillion, which is about 27% of the gross world product. Countries that have expressed interest in joining into the BRICS account for 60% of the world's known oil and gas reserves. Additionally, take into account the other trading blocs in which each of the current 5 BRICS countries are members, as well as the countries that are willing to join BRICS. It is enough to build an independent transnational monetary system. It means that more international oil trade can break the stranglehold of the petrodollar by using local currency settlement. The idea of 60% of the world's oil and gas producing countries joining BRICS, Brazil, Russia, India, China, and South Africa, raises concerns about potential geopolitical and economic challenges. Such a significant concentration of energy-producing nations within BRICS could create a dominant bloc with substantial influence over global energy markets, potentially leading to price manipulation and supply disruptions. Furthermore, increased collaboration among these countries may strengthen their bargaining power in international negotiations and organizations, potentially destabilizing existing energy alliances. The ball is rolling. When oil and other commodities are traded directly in non-dollar currencies, the function of U.S. Treasury bonds as foreign exchange reserves will be irreversibly weakened, as oil, the most important energy commodity traded, has always been linked to the status of the global reserve currency. The current reserve currency relevance is diminishing already little by little. A trend of reducing holdings of U.S. Treasuries has gradually emerged. Saudi Arabia's holdings of U.S. Treasuries fell to a 6-year low to $108.1 billion in June of 2023. The cumulative net selling of U.S. debt is nearly $80 billion. UAE also sold nearly $4 billion U.S. debt in total, according to data from the U.S. Department of Treasury. It comes rather apparent that the BRICS-bound countries are taking first steps to step away from USD and cash out before the U.S. Treasury shuts the taps. The US dollar has long been propped up by global trust in US debt. But the US has damaged the rest of the world's economy through unlimited quantitative easing and sharp and massive interest rate hikes. It should be said that the US is overdrawing on the credit of the US dollar. So the de-dollarization trend is actually the bitter fruit of the US own making. In recent years, the US successive unilateral financial sanctions have reminded more and more countries of the necessity and urgency for de-dollarization, which has now become a general consensus. Intertwined economies: USD, Euro, British Pound Sterling. Central banks worldwide hold significant reserves in US dollars. The introduction of a BRICS currency could lead to a gradual diversification of these reserves, impacting the stability of the US dollar and potentially leading to exchange rate fluctuations. If the US dollar were to experience a significant decline in value or tank, it would likely have various effects on the euro and the pound sterling. Firstly, both the euro and British pound sterling could appreciate relative to the USD, as investors seek alternative currencies that are perceived as more stable. A weaker USD might also result in higher demand for euro and in international trade, potentially boosting their export sectors. However, this scenario could also lead to challenges for Eurozone and British exporters, as their goods and services might become more expensive in USD terms, potentially impacting their global competitiveness. Furthermore, central banks in the Eurozone and the UK might intervene to prevent excessive appreciation of their currencies, as this could harm their domestic economies. Overall, the effects would depend on various factors, including the extent of the USD's decline, the underlying economic conditions in Europe, and the policy responses of governments and central banks. In summary, the USD, euro, and pound are interconnected through the global financial system, with exchange rates serving as a critical link that influences international trade, investment decisions, and the functioning of the global economy. Their relationships are dynamic, and their movements are closely monitored by businesses, investors, governments, and financial institutions around the world. Moving away from the dollar is indirectly applying pressure to the US government not to lose its geopolitical influence, and therefore any and all kinds of tensions may and will arise which could lead to armed conflicts. In conclusion, BRICS represents a significant force in the global economy, challenging established norms and potentially reshaping the future of international finance. Whether the USD falls from its perch as the leading reserve currency remains uncertain. But one thing is clear: the world of finance is evolving, and BRICS is playing a pivotal role in that transformation. Fuse is lit. But what will blow? If a superpower like the USA is forced into a corner, then one thing is for sure. It will push back, and this push could lead to an Armageddon, be it a financial or armed. Thank you for watching, and if you liked the content, please subscribe.